And let's cross now to London for the latest news. I'm joined by Louise Cooper from BGC Partners. And Louise, I'm finding it very difficult to keep up with this tricky market. I mean, we've got a credit downgrade on Italy, and yet the market seems to be going up in London.
Well, I kind of like to summarise it by saying that we've all been so badly beaten up with negative financial news. What's another slap in the face? And I think that kind of sums it up, really. But first thing this morning, markets did actually open down, but didn't stay down. And now we've had a little bit of a rally. To be honest, we knew that the Italian debt situation is not great. Quite clearly, we've known that. We've known for some time that President Berlusconi, Prime Minister Berlusconi, is not keen on austerity measures, a man more interested in other things. So, yeah, I don't think any of this is new news, I think is how I would categorise it.
But do you think the market might also be numb? Because I think you're sort of describing it as a bit numb in a way. Would it also be numb if there was a credit downgrade of some of the other nations on credit watch, like Spain, Ireland, you know, those sorts of countries?
I mean, quite clearly, there is a significant Eurozone debt crisis. I mean, quite clearly, we're not getting much help from the Eurozone political leaders. I mean, what is interesting to me is it seems to be we're getting far more help from central banks and all the various measures they're taking than we are from those who have been elected to deal with these kind of crises. So,
that was quite an extreme measure earlier in the week, wasn't it? The 5 central banks, the Fed, the ECB, the Bank of England and Japan and Switzerland holding joint auctions, unlimited dollars between now and Christmas, and yet the market doesn't seem to have used that and gained a great deal of confidence from it.
No, essentially, they were worried that European banks were having difficulty borrowing money in dollars, so they've come out with their sort of emergency stopgap to help them. But I think the point is it's a backstop. The interest rates they're charging are quite high, and actually, if you look at the wholesale markets, and here at BGC, we have a whole load of brokers who broke in these markets every single day, and they still keep saying to me, you know, Louise, credit is truly crunched. Today, we had in the FT that the German giant engineering firm Siemens had chosen to withdraw 500 million euro of lending from a big French bank. We don't know what bank it is, but it just highlights that there's an awful lot of institutions out there, companies, money market funds in America, whatever, who prefer to put their money with the ECB, which is very, very safe, rather than necessarily lending it to any French banks or German banks or any banks they perceive as being risky. So wholesale market's still very much crunched.
What about the floor behind you and how investors are feeling about companies and company valuations?
Clearly, equities are looking cheap. You know, single-digit PEs for the FTSE, the CAC and the DAX just about, with nice, good dividend yields. Unfortunately, the level of fear is so much that I can't see anybody coming in to fill their boots, coming in and buying the markets. The outlook is just so uncertain. You know, where are we going with the Eurozone? And frankly, that's a very big question no one has the answer to. And in such massive uncertainty, nobody seems to be willing to take any big bets, and that is very, very clear. Bets are off.
So it could mean that people just at some stage just exit equities.
Well, we've already seen, actually, in America, I saw some figures yesterday suggesting over the last 4 months, American individual investors had taken $75 billion out of equity investments, which is a really quite large number and just highlights how individual investors, retail investors, get terribly nervous with volatility. And I can tell you, equity markets have been hugely volatile in the last few months.
So where does this leave us now with Greece and the likelihood of a default? I've asked before others whether it was a default is now priced into the market.
The trouble is we don't know when it will happen. We don't know if anybody's creating a backup plan to sort of limit the explosion, limit the collateral damage if and when Greece does default. If markets felt confident that somebody was working on, some politicians were working on a way to minimise the stresses in the system when Greece defaults, I think that would give people a little more confidence. The trouble is, you know, I don't think anybody really has that level of confidence in what our leaders are doing.
Louise Cooper, thank you very much for joining us tonight.